Dominic is a very, very distinguished gentleman. He runs globally the best known and most prestigious management consulting firm in the world. Indeed, McKinsey, for those of us who've been consultants in other firms, has always been the gold stick, the gold yard by which we have judged ourselves and others. And he is going to be talking about an absolutely fascinating part of the world, which many of you here will know, but in detail that most of you won't. Dominic's a Canadian. His undergraduate degree was in Canada, in British Columbia, and he subsequently was involved as an honorary fellow at Brasenose College, but prior to that was a Rhodes Scholar at Oxford. He's been with the firm for almost 20 years and advised clients on a whole range of industries, including banking, consumer goods, high-tech, and industrial. And very importantly, because it's relevant to tonight's talk, prior to assuming his current role as head of the firm, he was based in Shanghai as McKinsey's Asia chairman from 2004 to 2009, and before that had led their office in Korea, taking something of a gamble, I suspect, in doing so, because not so many people were sure how important that market was. Apart from coming to the University of Edinburgh to speak to us at the business school, he has been to places of some repute, someone might say of lesser repute, or less distinguished, including, I would add, Davos, the St. Petersburg International Economic Forum, les Rencontres économiques d'Aix-en-Provence, the Asia Business Council, and the China Development Forum. He has authored more than 80 articles on the role of business in society, leadership, and financial services, Asia, history, and the issues and opportunities facing markets worldwide. He leads, as has been mentioned, McKinsey's work on the future of capitalism, long-term value creation, and the role of business leadership in society. He's a member of the Canadian Prime Minister's Advisory Committee on the Public Service, a trustee of the Brookings Institution, a member of the Singapore Economic Development Board's International Advisory Council, an advisor to the Asia Development Bank, and so on and so forth. Very well qualified to speak to us today. He is also a good friend, a great supporter of the Asia Scotland Institute, and Dominic, we're absolutely delighted to have you with us today. Thank you. Thank you.
Thank you very much, Roddy, and also Ian for hosting us. It's an honor to be here. As I was saying, Edinburgh, in many ways, to me, is the epitome of globalization. A lot of the institutions that I admire the most were formed here, and a lot of the most successful investors in the world are based here. And I've just been learning about all the technological prowess that's just surrounding this place, so it's great to be here. The plan is that I would just speak for at maximum 30 minutes, and then I think we go into a Q&A. And please, there's no sacred cows, or if you can criticize, whatever you want to do as we get into the discussion. But what I wanted to do is basically go through, and I hope I'm going to be able to work this well, three sort of topics quickly. One is to talk a little bit about the trends that we're seeing around the world, and the biggest of those trends I want to focus on is what I call the re-rise of Asia, and why I think all of us need to be thinking about that now. And especially when I see the younger leaders in the room today, I would just say that I'm jealous of you, because I think you're going to be leading in some of the most exciting times in history, and a big part of that's going to be Asia. So I'm going to talk about the trends, talk a little bit about global champions, particularly the Asian global champions, because I think there's a lot that we can learn from Asian global champions. I think the notion of the Western management, Western businesses teaching the East how to do things, we're long past that. There's a lot that we can learn from how many of these new champions that are increasing by the day can teach us in terms of how we lead organizations as we go ahead. And then talk a little bit about some of the implications for organizations as we look ahead. So the trends, and I'm going to go through these fairly quickly, just given the time we have, are really around 5 areas. The first is the rise of the emerging markets, and in particular the re-rise of Asia. I'm going to talk about the resource scarcity issue, which is a direct result, in my view, of the changes that are going on in Asia and the emerging markets, the middle class, the huge middle class that's being formed that will consume at levels that middle classes in other parts of the world do today will have very significant implications on resources, energy, food, and water. Talk about the aging population of the Earth. We are going to be in a much more aged situation than we've ever experienced. It's obviously more extreme in some countries than others. But that force in and of itself is going to change the world on many dimensions. The digital age, this is the technology, it also is the big data. It's not only automation, but it is how we use information. And there's just going to be some very significant transformations occurring there. And then the fifth is sort of what I call the market state, or in particular Western government, which is also going to have to go through significant change. In my view, and many people's views, is too short term. I think it's not built for purpose to deal with the issues that we have coming forward. So there's going to be changes in the role, we think, of the nation state and how democracy works. So those are the 5 areas that are happening. I think the combination of those 5 mean that the next 15 to 20 years will be, over a 300-year time frame, very, very different, very, very pronounced, and a truly historical time frame. And it's happening in our time window now. So let me focus a little bit first on the re-rise of Asia and the emerging markets. One way we like to do it is if you could lay the Earth out on a flat piece of paper and then try and balance it and say where would that position of balance be. In the year 0, it was somewhere north of Afghanistan. That was sort of where the Earth was balanced. And over basically a 2,000-year period, it headed towards Iceland. In 1950, Iceland is where you'd sort of put your finger to balance the work. But it basically took about 2,000 years to go from northern Afghanistan to Iceland. And what's happened in the last 20 years, and it will be happening over the next 10 years, is we've shifted right back to where we were. In fact, it's further east, right? So the economic power of the world is shifting back to where it was 2,000 years ago. And 2,000 years ago, China and India were the dominant powers. They were up until probably 250 years ago. So many of the ideas of what we're going to see in the future, I think we can actually learn from what happened in the past. So the fastest trade route on Earth right now is the Silk Road. I call it the New Silk Road between the Middle East and China. And it's not oil. It's investments, it's capital goods, it's consumer goods that are going on. That, in the year 1000, was the largest trade route that we had. So there's a lot that we can learn, I think, about the future from looking at that past. Some of you may have seen this photo I used. This is a picture of Shanghai that I took when I was living in Korea. So it was 1997. One of my first trips was to Shanghai, and this is looking at Pudong, or as I said, my colleagues in New York call Poo Jersey. It's sort of across the river where you see this, and it was basically an onion field, right? There was some vegetables, some buildings that were grown. This was 1997, and basically, if you look at that place, sort of 7 years later, that's what you get. So you get these transformation of cities that are occurring, and in China there are 200 cities that are going through that transformation right now. And it's again driven by urbanization, people moving from the rural areas to the cities. And no one on earth can stop those people moving from the rural areas to cities. The Communist Party of China has tried on many occasions. SARS has tried. H1N1 has tried. There's a whole series of factors, storms that have come through, but you still see, like gravity almost, 250,000 people a week moving from rural areas to cities. And that, by the way, is happening in many other parts of Asia too, including India. India is not achieving the growth rates it can, and hopefully there will be some changes there will reignite the growth engine, but it will always have a base level of growth because of the rural movement to the urban centers. That's happening there. Indonesia, it's also the driver, and also Africa. This is primarily about Asia I want to talk about, but you should also think about Africa. Nigeria will have more babies born in that country than all of Europe combined this year, right, in terms of the demographics of the shift. But it's urbanization which is really driving this. As I said, it's happening in 200 cities in China. It's happening in many other parts of Asia. And now we're taking photographs now of these places to sort of do the before and after just to see them. The interesting thing for me is I don't recognize 90% of the names of the cities, even though I pretend that I know something about Asia. It's just when you see the cities and the importance that they're playing. And again, a small city is 5 million people. That's chicken feed in the scheme of things. When we talk about large cities, we're getting up into the Chongqing area where it's 35 million, bigger than my home country as a whole in one city. And the implication of that, all of that urbanization, is a very large middle class that's going to be formed over the next 15 years. We estimate that the total size of it from emerging markets will be about 2.7 billion people. In Asia, there will be 2.2 billion. So the vast majority of it is in Asia. And to put that in context, the last industrial revolution that we experienced was about 1/1000th that scale, right? So it's the speed and the size of which this transformation is occurring that we need to be thinking about as we do it. So in my view, if you want to be a relevant leader, and I don't care where you live at the end of the day, you have to understand what's going on and have relationships and linkages in these parts of the world. We're also seeing a lot more of the new large companies coming from this part of the world. So when we think about 2025, we're going to see about 7,000 new billion-dollar-plus companies being formed. They're in place roughly now, and 7 of 10 of them will be in emerging markets, and 5 of those 7 will be from Asia, primarily China, as we go ahead. So that's where the companies are that matter. And so when we're dealing with the French government, was there last week, we talk about a lot of European capitals are saying, how can we make our city the center for the multinationals, right? How can you make Edinburgh more of a center for commerce and what's happening? You see that happening, and I think that's an opportunity for this part of the world, but you have to proactively go and find them. They're very difficult to find because they're often private. There isn't sort of a listing. These are not the people that are listed on the Shanghai Stock Exchange. These are private companies that are anywhere between the order now $500 million and $2 billion. We already are seeing the profit pools shifting to the east. This idea that the future's in the east, we're already in the future. In almost every single product category, asset class, you're seeing the bulk of the profits being either made or shortly to be made in that part of the world. For the sake of time, I'm not going to go through this. E-commerce is one, by the way. We always think about the Silicon Valley as the center of the world for innovation in tech and in data. I would suggest that you also need to be thinking about Hangzhou, Shenzhen, and Beijing as places of phenomenal innovation and change that's going on. And you will not be a relevant tech company if you don't understand how those organizations work, because there's some phenomenal things going on there. Taobao, Alibaba's website, sort of a combination of eBay and Amazon, has 100 million visits per day on its sites, right, in terms of where it is. So just the scale and how they think about using big data is quite a bit different than what we see in other parts of the world. Again, we're going to see many of these companies being in the Fortune 500. They already are, and again, it's the Asian companies outside of Japan that are doubling the fastest. Again, many people don't even recognize these companies, but they are significant players, innovators that are out there. We think that cities are going to matter a lot. So when we look, for example, at China, and I'll come to this chart, we don't think about China anymore as a country. We think about it as 22 clusters of cities. The cities and their behaviors are very different in terms of people's buying behaviors, how regulation works, what media people look at, and so forth. They're very different. And so thinking about cities as opposed to countries is going to be an important part, I think, of your arsenal as you think about leadership down the road. There are about 440 cities that will account for 70% of the world's growth. And I would argue, again, 90% of those cities, most people wouldn't recognize where those cities are or who they are, but they're happening now. One government I was most impressed with, by the way, was the Chilean government. I remember when the last government came into office, and I was visiting in Santiago, and the new Minister of Foreign Affairs said, "We would like some help in diplomacy from McKinsey." And I said, you picked the wrong place. We are the opposite of diplomats and blah, blah, blah. And he said, "Why don't you listen for a second? I'll explain what I mean by that." He said, "We as a country have focused our consulates and our ambassadors much more to core Europe, and he had with him the ambassador to Austria. And he said, with all respect to my colleague here, it doesn't make that much sense for us to have an ambassador to Austria. We should instead have an ambassador probably to Temasek, the investment fund in Singapore, to the CIC in Beijing, and so forth. So this notion of how do we reallocate our resources, our diplomatic resources, to fit where trade is going to be in the future is something that I think we need to be thinking about. I mentioned the clusters. This is something, again, that we look at as opposed to countries, looking at clusters of opportunities. So I hope that gives you a bit of a picture. It's an overview of this very significant shift that's occurring now in our investment horizon, in your leadership time frame. And so having a strong sense of where you want to compete, what type of opportunities there are for you in terms of growth and so forth is going to be important for the future. The second trend, though, that we worry about because of those 2.2 billion middle-class consumers is we're going to see some severe constraints on resources. And we think particularly in water, energy, and food. On the water side, we did some work with the World Bank, IFC, and 6 of our clients that use a lot of water. So people like Coca-Cola, where it takes 2 liters of water to make 1 liter of cola. So they're obviously very interested in how we use water and where the water is. And what we found, we looked at every basin on the planet and found that there effectively will be a 40% excess demand versus supply of water in 2030, assuming technological improvements that we've been seeing over the last 15 years. Hopefully there'll be something wow that will change that curve. But when you have a shortage of water at that level, that creates conflict and challenges. And the problem with water, right, is it doesn't follow political borders. It goes where it wants to. And so when you're in, you're in China, and a lot of the water in China is a source water for the Mekong going into Vietnam, and you dam it. And the Vietnamese say, you can't do that because that's the source for our agricultural side. And the Chinese say, well, guess what? What are you going to do? You're going to come in and tell us to stop building the dam? It's our water before it's your water. Ethiopia and Egypt are going to run into challenges as Ethiopia becomes an agricultural powerhouse. So we're going to see a lot of tensions on that side. And we also think that we've had this commodity price curve for the last 70 years, up to about 2005, that's been downward sloping. Actually, the cost of the average commodity, and I'm bundling a whole bunch of things into that, oil, copper, met coal, has actually been on a decline. And since 2005, it's been on an upward sloping curve, and we believe it will continue on that. So I frankly don't care if the copper price is low today or whatever. The long-term shift is up because of the consumption of those 2.2 billion people. And again, you see it in food, and it's not only the number of people that are consuming more, it's also the shift, as you know, from grains and rice to meats and what that does, not only for food, but also water. And if you look at any forecast, these are things we use with our clients. They're not just estimates that are out there. There are businesses that are making investment decisions based on this, and you can see in everything from primary energy, steel, fertilizer, very significant growth prospects in terms of demand that we'll see over time. We think this is going to have some big implications on oceans. We've explored 5% of the world's oceans. One of the things we see a lot of our clients doing now is looking at how to mine, 5,000 feet below the Earth's surface. And there is now the technology to do it. And about 66% of the world's waters are not governed, right? They're in no man's land, so to speak. And given how we've managed our fish, the prospects are not great in terms of how we do it. So how we think about that and work it is going to be something that will be very important. The aging population I mentioned is a critical factor. I would just point to a couple of things. Looking out at 2050, for some countries this is happening in the next 5 to 10 years. Doubling the population over the age of 65, 400 million people over the age of 80. As I say, as I get older, I get more excited and calm, or maybe in some ways on that. But we need to think about that in terms of labor productivity, right? And how, when a pension plan was designed, let's say in England, after World War II, I think in 1947, It's 60 years old. The average life expectancy was 61 and a half years. It wasn't a very generous plan. But as we've aged, we haven't kept up with that shift. And so thinking about the workforce in a very different way is going to be important, let alone healthcare costs and so forth. It'll have huge issues for skills because you're going to have to train people much more often. We're now big believers in lifetime learning. It's not simply the case that you go to university once. I can imagine we're going to university 4 or 5 times. The sort of ongoing learning programs that are going to be required to keep people skilled up will be key. And it'll obviously be non-university learning as well as we go through it. The digital age, as I mentioned, is another shift that we look at. I think a lot of the heartland of this digital age is actually happening in Asia, again, particularly in China. But I'm just going to use one page here, and this is, again, what I try and do in McKinsey, because I joined to be externally oriented, not to do internal. So I see at least 2 CEOs or government leaders a day. I've done that every day for 5 years. And I always ask, what are the top 3 issues on your mind? What do you worry about? What are you excited about? And technology is always one of them. It's typically moving at 3 to 5 times faster than management. I guess, again, you look at the average washing machine today having more computing power than NASA used in Apollo 11. This is where it's going, and it's relentless. Technology is a bit like the urbanization that's going on there. The other piece is data, to your point. We're seeing that as humans, we're creating more data every 2 days than we created for the last 2,000 years. Unfortunately, 95% of that's useless, but 5% of it's very useful. And those organizations that can manage that well, do it well. And I would suggest to you that the best data analytics people, other than being here in Edinburgh, of course, are in places like Shenzhen and Hangzhou. If you look at Alibaba, who've decided to go into the banking business, right? They're lending money. They have a $16 billion book. And the reason they did that is because of the data they have on those 100 million people visiting the sites every day. They know how much shampoo people are buying. They know where people live. They know how many children they have. They have much better credit assessment information than a bank does. And it's virtual, so they also have a fraction of the number of people that are running it. So they're running a $16 billion loan book with 250 people, right, with a much lower non-performing loan ratio. So the opportunity for business disruption is huge, and that's something that we think about a lot, including at McKinsey, who's going to disrupt us from what we're doing. As we look ahead, there are at least 12 disrupting technologies that we see. One of the biggest ones is the mobile internet, and if you want to learn about the mobile internet, go to China. That's where you need to do it. Facebook, when they listed right at the time that they figured out that they had to move from desktops and laptops to the mobile phone. And that was one of the challenges they had, because they had to transition their model right during the period after their IPO. You saw their stock price go down, and then they shifted it. But the thinking and the learning is actually happening in China. Sort of an average middle-class woman in Shanghai never has to visit a store. If you like buying shoes, you can order 10 shoes of your choice. You get them within 2 days. You try them on, send 9 back, keep 1, and it works. And so the whole notion of property, real estate, shopping, and how that works is different. It's the logistics companies that are the fastest growing players that are there. I'm, again, for the sake of time, going to skip through these those forces that are going on. I think on the government side, this is a change where we can actually learn from some of the Asian countries and how to do things. And I'm not here to say that Chinese-style government is the model that we should all follow and so forth. But what I am saying is that there is the technocracy, the capability building that's done in those governments is pretty special. And you look at the depth of talent that you see in those places. There are people that have run businesses. There are people that have run towns, cities. There are people that have actually run initiatives. They're extremely well trained before they lead. And one of the worries I have in a world that's moving faster and faster with more dislocation, more short-term thinking, that it's going to be more difficult for government to be able to handle this. And what's the training we're providing for our leaders? What are the types of leaders that are going in to these roles? And I would argue that there is a pretty significant talent gap when I look at the technocracy in many of the Asian countries. Singapore obviously stands way out there in terms of the skills that are there. But even, again, as I say, to look at China, they basically make the GE Crotonville thing look like old school in terms of how they move people. You can literally predict where the next leaders are coming from because of the positions that they're putting people in to be tested. So I'm not saying anything about the politics. I'm not saying anything about democracy. I'm not saying anything about that. I'm talking about the capabilities of the people that are in there and the amount of time and energy and resources that are put in place to help ensure that the technocracy can deal with the issues. I'm going to end this section just on the implication for change. And this is something that I think about a lot every day because of where McKinsey is positioned or not positioned, as the case may be. With all of those five forces occurring, the fundamental shifts that are going on, the volatility that will be with that, we're finding out that the average lifetime of a company is shrinking, particularly of a Western company. And if you look at if you're in the S&P 500, which means you're a pretty significant organization, you're in that list in the year 1935, which was not a great time in history. The average lifetime was 90 years. If you were on that list, you typically last 90 years. Today, if you're on that list, you typically last for 18 years. That's when I look. McKinsey's 90 years old, so I worry because we have no right. We have no right to be here. Luckily, there's no law for us to be there. But if you don't change and adapt, you will disappear. And I think one of the biggest challenges in innovation is knowing where the competition or the innovation is going to come from, because it likely now doesn't come from your sector. It may come from another sector. As Paul Pullman says at Unilever, my biggest competitor in India is actually the phone companies. People have a choice between buying a piece of chocolate for some excitement or benefit, the trade-off is not Nestle's chocolate, it's an app from a phone company and where it is. And so we're seeing a lot of cross-sector change that's going on. And I think, again, a lot of these champions that are coming from Asia. And again, when you actually look at what's happened over the last 10 years at sort of standard company names that have disappeared off that list, it's quite a chunk. That said, I think this emerging market, and particularly Asian opportunity, represents massive opportunities for businesses, particularly here. And I'm just going to quickly go through these ones. I think on the consumer side, we see a $22 trillion consumer market by 2025. That's in the emerging markets overall. Just to put that in that doesn't probably mean anything in terms of the numbers. I also have to think about it in terms of companies. We basically believe that in Asia, we're going to need 76 Procter & Gamble's to be built to be able to satisfy the consumer's needs on that side. So you think about the scale of that needs to be built. That I think is a wonderful opportunity for people, for entrepreneurs to be thinking about. Ag food is going to be extremely important. Ag food is often seen as the Luddites are in that sector. I think this is going to be, if you will, the new plastics. This is the place where technology is going to change, where the world has to be fed. We're going to have to see a whole different way of doing that. And I think this represents big opportunities for people. Education as a business. As I said, there are 1 billion Asian youth that need to be educated in every given year. We did the estimates, actually, Geraldine and I, looking at the number of qualified students that could get into a Canadian university, and that number is 3 million. So there are 3 million people in Asia that would like to go to a Canadian university. When you say that to UBC or the University of Toronto, they go, we can't take that many. I said, I know you can't take that. I'm just saying the demand for that is at that level. And it's Australia's third largest export, education. And with all respect to our Australian colleagues, they're not doing such a great job of the international education side, if you've seen what's happened with some of the Indian students that have been there. That said, it's their third largest export. Healthcare is going to be a very significant business opportunity, again, largely driven in Asia. Infrastructure, $57 trillion of global demand over the next 18 years, 27 trillion of that in Asia. This is, again, the bridges, the roads, the power plants, and so forth. And then natural resources. These are where there's just going to be natural rising tides. I'm not even talking about the big data side of it, where I think there's going to be a very fundamental consumer shift on it. So that is there. And for the sake of time, I'm going to just focus a little on the global champions. Global champions are companies with over $10 billion in revenues that are 25% above the median profitability of the FTSE worldwide index, and operate in multiple countries, roughly about 10 plus countries. That was sort of the definition we used. The global champions outside of Asia have a higher performance than just the FTSE World Index set of companies. The interesting thing is the Asian global champions are operating at a even higher rate than that, right? The Doosan's, Hyundai's, Huawei, you see some of the Japanese that are there. What is it that they're doing? There are 5 things that we particularly are learning from those organizations in Asia. One is this aggressive reinvestment. The typical, and you have to be careful about stereotyping. There's not an Asian company and a Western company, but in general, when you do peer comparisons in the different sectors and you compare the Asian global player with the Western global player, the Asian player invests at typically double the rate of what the Western player does. And I think part of that's driven by the issue of quarterly earnings pressure that many Western CEOs are faced with. They find it more difficult to invest at the rates that the Asian players do. But that has a big impact over time when you start doing that on a CAGR basis, a cumulative average growth rate. They're much more agile in decision making. We find that the speed with which they can reallocate resources is significantly different. One story I'd like to give is of Samsung. And there's a famous talk that was given by Chairman Guni Lee after record profits on the electronics side, then basically bringing his top leadership group together and saying, the past doesn't predict the future. Just because we had record profits doesn't mean that that's the way it's going to be in the next 5 years. In fact, I'm terrified that we actually have the capability to do it. And I want you to be in the mindset of being willing to change everything. He said, I want you to be willing to change everything except your spouse and your children. That was kind of the mindset he had. And that kind of a shift in resource reallocation is not what we would see. Most people base their resource reallocation on last year's results, plus or minus, several percentage points, not 10 to 15 percentage points. This competing on value. This is one area where someone was asking at a session we just had before this, what is it that our Chinese clients ask us to spend most of their time working on, for example? And the number one issue is tell us what our consumer is doing, because they're changing so quickly. These middle class consumers don't stay fixed for more than 6 months. So where are they buying? What do they like to see? What's going on? Where is it changing? Which cities are moving faster than others is very granular. And so their ability to be agile and nimble is an important part of what they do. And then the innovation rate. I mean, the Chinese companies are putting, and this is again on average, there are exceptions on this, the R&D spend is at a significantly higher level, often in some industries double what you see in others. Some of it, unfortunately, is wasted. It's not done very effectively, but the push for the R&D on the innovation and the patent side is a very important part of what they do. So there's some things we need to be thinking about as we look at these organizations. And these, I'm not going to go through these now, are just some examples of organizations that are doing that. I think you could look at 100 and get a lot of benefit. One I like to look at a lot is Lenovo. You could even see the top 100 people in Lenovo is a more global organization than you'd see in IBM, for example, and where it is. So they've got a very global leadership structure from the get-go. And so they're very fast at being able to make decisions in Brazil and Turkey as they go ahead. The last page, and I promise I'll shut up after this, is just, so what are some of the implications for organizations? And I think, again, it's very much around this reallocation. As we look at this future 10 to 15 to 20 years out, are our resources, our capital and our people in the places that are going to matter? And I would argue that most companies, and I look in the mirror when I say this with McKinsey, is we're not moving fast enough. We're not hiring aggressively enough from these new places. We don't have enough of our leadership coming from these places, and we're not moving enough of our leadership to these places and where they work. And that's something around the resource reallocation, because the danger is we're going to wake up in 10 years and you're going to realize that you're not that relevant anymore, because there are other organizations from Asia that are moving at that speed. The agility and flexibility on the business model, again, for me, when I joined McKinsey, the biggest changes going on were product innovations or service innovations. There wasn't business model innovations. You would never have to think as a bank that Alibaba would be a competitor, if you will, just as an example. And I don't care what sector you're in, healthcare, steel, airlines, you're seeing business model transformation. And how, as a leader, as a CEO, do you get the right amount of stability in your company, but also the right amount of change? It's a very difficult balance to try and be able to do it, because most people don't like to change. Most people are very comfortable with the way it is, and they're not used to the speed with which it's moving. Digitization is absolutely critical. Digitization is the biggest management fad today. I don't think it's a fad, it's a reality. We're trying to take McKinsey, we like to give medicine but not take it. So we're trying to digitize ourselves. It's quite a chaotic experience to go through it. But mining companies are doing this, airlines are doing this, industrial companies, to be able to leverage that information to operate more effectively, but also work with your consumer better. And then talent, and that's when I'll say the last thing. I think at the end of the day, Ian, as you said, this is about leadership development. The biggest issue that organizations face as they look ahead is, do you have enough leaders to be able to operate in this environment, which is very different than the leadership that we've had for the last 20 years. And the last comment I'll make is I remember speaking with one organization, I won't mention the name, but they're a well-known leadership factory. And I asked the CEO, I said, after the financial crisis, what did you learn about leadership? And he said, well, the one thing I learned is I had 2 of my 10 senior-most executives, highly trained. They'd turned around businesses, built businesses, worked in different parts of the world. They cracked like glass when the temperature went up to 1,400 degrees. They couldn't handle the heat. They were paralyzed. They couldn't deal with it. And I said, well, what do you do with that? And he says, the problem is you can't sort of take someone up to 1,400 degrees and see if they're okay. Those are extreme conditions. And so what I said, well, what do you do? And he said, well, I think it's about people's character. It's their resilience. It's more who the leader is than what they've learned or what they are. It's who they are. And I said, well, so what are you doing about it? And he says, well, I now have sleepovers. So I bring some of my executives to stay with me and my family, to be with me for 2 to 3 nights, see what they're like, and you sort of get more of a sense of the person and where they are. And I'm not suggesting that be a new course. We do a sleepover course, but it's a notion. What I'm trying to get at is the character to be able to have the view of where you want to go long term. It's sort of like have a telescope in one eye and have a microscope in the other to be able to deal with it and have the resilience to be able to drive it. That's something we need to do. And I think there's a lot of actually Asian leaders who've had to live in that type of environment for the last 10 years that are actually pumped and primed to kind of thrive in this world. I've talked for too long. I'll shut up. I look forward to the discussion with you, Ian. Thank you.
Ladies and gentlemen, not so much a tour de horizon, but I think a tour de force, an absolutely stunning set of figures and statistics that Dominic Barton has given us, and so many things to think about and ask about. Now, he's very kindly agreed to take questions from the audience, and just to give you time to clear your throat a little before the questions rain in, I'd like to ask one of after the presentation, because I was left with a paradox about what he was saying. The first thing he was saying was the imperative for Western companies to adapt and to grow to meet this challenge. But the other point of his talk was the need for companies to be entrepreneurial, to be very adaptable and responsive and flexible. And I wanted to ask you, how difficult is it for companies both to expand and to be big, but also to be entrepreneurial?
Yeah, it's a great question. As I said, that's one of the challenges, I think, is that people, even when you recognize the need for change, most people in organizations don't want to change. I might just use one example. You take Walmart. Walmart is an organization that's known as probably one of the best retailers on the planet. They know where to put boxes on the right piece of property. They know how to do supply chains. They know how to price things. They know how to negotiate with supply. They've got an incredible set of competencies that make them terrific. And then all of a sudden they start to realize that more of their sales are starting to be done online. First it was 6% of the sales in the US, retail sales being done online, growing at a high clip so that they could see it being at 20 to 25% within a 15-year period. And then they found out that 50% of the actual sales are at least being investigated online before people come into the store. So they're using technology. So all of a sudden, Mike Duke talks about this, the last CEO, this notion of all that we now have to become a technology company. And I remember meeting him, and he'd be comfortably saying it. He said, and he said, Dom, if you'll notice, we're meeting in Bentonville. This ain't exactly California here. It's hard. We don't have the biggest number of software providers in Bentonville, Arkansas here. We have to become a technology company. And I think what they did is they tried it. They did a Walmart.com, which they based out of California. They got Jim Breyer, one of the biggest VC investors in the world. The guy invested in Facebook to go on the board. They embraced the shift. And so I think it's a recognition. Many companies don't recognize it, or they hope it'll go away. I think you've got to recognize it, and then you've got to invest behind it and be willing to have failures. It's not going to work in a straight line. There's going to be a lot of orthodoxies that have to shift. And so that's, to me, they're an example of both. They have the scale, they have the staying power for a while. That gives them a lot of benefit, but they've got to act like a nimble player, and they've had to go kind of out of the box, so to speak, to be able to do that.
Thank you very much indeed, Dominic. Let's open it up to the floor, and I'll take a question right at the back, the gentleman in the blue shirt. Thank you.
Thank you. I'll shout this fine. Thank you. How do you deal with the concerns that China's slowing at the moment, and is the growth, and the general Asian growth, is it actually sustainable?
I'm very bullish on China and on Asian growth, particularly Indonesia. China. I'm not so bullish on India because it's a governance issue. It's kind of any growth you get is in spite of what's happening with the government, so to speak. But I think that in China I do, and the reason for that is, it's 53% urbanized, as I mentioned. So the idea that there's too many bridges and there's too many roads and there's too many railroads is simply not the case. You've got actual cities, like I said, 200 of them that are growing. You've got a middle class that's there. I think the challenge is it's not going to be in a nice straight line. It's so big that you can't manage it in that way. And I think a lot of the reform going on that's why this market reform is so key, because you can't policy manage your way through it. But again, people may say I've drank the Kool-Aid for too long from living in there, but I just believe with the underlying fundamentals, 53% urbanized, that middle class is growing. It's a very demanding group of people that want to buy. You're going to get reform in healthcare and pensions, which will allow people to save less. The services sector hasn't even started, in terms of the growth opportunity. I'm very positive, and it's just a large economy cannot grow at 10% of a $800 billion GDP economy versus 7% of a $5 trillion economy. I'd rather have the 7% any day of the week. Do you know what I mean? But so I think we got to remember that element too.
Thank you. Right, I'll take the gentleman there at the end of the row with the spectacles, and then behind him. Yes. You first, and I'll come back to you.
Thank you very much. I wanted to ask you about the emerging middle class. How does the consumer profile of the emerging middle class differ from the established middle class? And are they diverging or converging?
Well, what we're finding actually is there's probably three groups. There's, as you said, the established middle class, which is actually the minority now. That group's been around for 10 years. What we're looking at is the There's an emerging middle class, the sort of the migrant workers that have just come in, sort of in the last 5 years they've entered into it. And then there's a emerging upper middle class, if you will. And there's quite different buying behaviors. Brands matter much more to the emerging middle class than to the established middle class and the upper middle class, especially Western brands. They don't matter as much when you get into the upper side of it. That's just as one example that we would look at. There's also an age difference. They call it the G2. It's like the Generation 2 middle class. These are people that they're very demanding. They're typically, they call it, there's the G2 or the 1-4, as they call it. You've got 4 parents or grandparents that are looking after one. They're quite a spoiled group of people that are pretty demanding about what they want to get and how they want to consume and where they are, and their behaviors are quite different than what the other middle class is. So the segmentation is very important. And then again, those groups vary whether you're in the Beijing, Tianjin area or whether you're in the southern part of China.
Thank you very much indeed. Yes, sir. Thank you.
Yeah, hi. My question is regarding the leadership. If the future market is in Asia, for Western company, the leadership will be coming from the Asia or the emerging market. So do you see like headquarter of the Western company moving to Asia in future after 10, 15 years?
Absolutely. I mean, I think that, I'll get myself in real trouble by saying this. So what the hell? Peter Sands is a good friend. Standard Chartered Bank is based in London, but the bulk of its business is in Asia, right? And I think over time, and part of that's the benefit of the list of being listed in London. That helps with all sorts of things. But I think over time, you're going to see people at least having multiple headquarters. You find now that most of I'd say the top 20 Fortune 20 companies in the world think of themselves as having multiple headquarters. There isn't one place for everything. And so I think that's already happening. I mentioned Lenovo. Their head of strategy was in New Jersey. Their head of marketing is in India. Their head of procurement is in Beijing. It's a group that's spread around the earth. They meet by video and then they meet in person every 6 weeks. So if you said, where's the headquarters, they're actually quite global in what they do. So I think we definitely will see more of it. One last story to say is I remember I'm going to talk about this publicly, the elevator company in Finland called Kona. And I met with this guy. It was like one of those classic Finnish dinners where it's a candlelight and people looking at their shoe. We were down like this. And he said, I have a question for you, Mr. Barton. He says, why do you keep sending me people from your Norway office and your Sweden office to come and help me? I said, well, you're part of the Scandinavian complex. This is how we do it. And he goes, have you actually looked at where my business is? And I said, well, I know you're doing things in Asia. He goes, 90% of my business is in China and India. So I would prefer to be part of your China practice, not your Scandinavian practice. Just because I happen to live here, that's where we are. Most of our resources are out there. So I don't know why you spend time here.
Thank you very much. Multiple headquarters.
Yeah.
Could be catching on here.
Yeah.
Yes, lady here.
With the rising tide of consumers, do you have any observations on the future capacity for dealing appropriately with waste? Because I imagine it will become quite a problem. And there's a question of whether it goes to landfill and is wasted or is some way harnessed. And that seems to me an opportunity for somebody.
I think it's a huge I think this whole resource efficiency is I think business is going to have to take more accountability and actually can also make money, frankly, by using those resources effectively. One area, it's not my area of expertise, but I'm very enamored with what Ellen MacArthur is doing on the circular economy, if you've seen, which is the notion that businesses should own those products through their life cycle. So if you get a cell phone, after you use it, you bring it back because we can reuse 65% of those parts, right, as opposed to chucking them in the landfill. One of the automobile companies, instead of making engine blocks over again, you bring the vehicle back and it's used. And so I think that and there are probably 20 CEOs from around the world that are very interested in trying to make that a business. China, the cities, because of the pollution, Chinese cities are being very aggressive on that side of it, how to think about waste, water, the water systems, but also the products and who owns them over time to make sure they don't just get chucked out, but they're sort of reused in the system. But I think that'll create lots of new business opportunities for people. But it's going to have to be priced appropriately.
Yes, the lady there, the second row in, the second seat in. Thank you.
Hi. You've expanded on the narrative on the domestic consumption in the emerging markets in Asia in particular, but given how export-oriented these economies are, to what extent should we be worried about the slowing growth in the developed world?
And what do you mean? Why would there be slowing growth in the developed?
Well, given that China is a manufacturing powerhouse and places like Vietnam and the Philippines will be the next one to take over with the low labor costs, those products don't necessarily all go to domestic consumers, they go to consumers in the West. So if the consumers in the West are less able to spend,
good point, yeah.
To what extent is all of that going to happen?
It's a great point. I think the thing is, though, that there's a lot of the demand is coming from China now, because as that middle class gets to a certain size of it, it does matter what European middle class and American middle class people are doing in terms of buying, but the weighting is getting such, just within Asia, that you're able to, the consumption growth, again, this is the plan, will be there. I think on the production side, you're also going to see that China's going to they've got a big focus on advanced manufacturing. They've got 7 strategic industries. I mean, it is not a low-cost manufacturing place anymore. I mean, that is moving out, and they're moving up the value chain. And so I think you're seeing that, and then that will move like it has in other places to other countries like Bangladesh and Burma and other parts of the world. But I think the demand, if you actually look within Asia, Roddy, we were talking about this before, when I moved to Asia in 1997, I met with a Japanese mentor, and he sat me down and he said, Dom, Asia is a Western invention, just so you know. And I said, what the hell does that mean? And he goes, it's a time zone. We don't actually have a lot to do with each other. But there's not a lot of trade, so you better understand that. The difference between that time and today is radical. Asia is a much more integrated market, and there's much more supply within Asia going to demand within Asia than there ever has been before. So if you just looked at the lines of trade or air travel, it's like spaghetti, where even 10 years ago there's a lot of white space. So that's why I believe that.
The question here.
In our parochial country, about the size of a village in China, the big issue is Scottish independence. And Japan has been a bit sort of cagey about whether it's a good thing for Scotland. Standard & Poor's say it's going to be a very good thing. BlackRock, Citigroup, Fitch are less convinced. I wonder if McKinsey or even the Asian countries have a view whether it would be good or detrimental to Scotland.
I don't think they think of it as being one of the top 10 or 20 issues in the world. I don't mean to be rude. I just want to be, that's how I would answer it. There's a lot of issues I could be thinking about, or that isn't something that's on our mind. I mean, I think that's up to what people want to do in the various areas. It is not the big issue in the Politburo, I think, talking about what's going to happen here, or in Quebec for that matter, or in other parts of the world. I'm not trying to be crass, that's my sense. Yeah.
That is a reply worthy of the Henry Kissinger Award for Diplomacy. Yes, gentleman here, thank you.
Thanks very much for the presentation. Can I ask a financial services question, i.e. banking, insurance and asset management? And looking very much to China, I think it's fair to say that no foreign company has really succeeded in that market. And it's very, very easy to be seduced by the statistics and the size of the population and so on. But I think many foreign financial services companies would probably love to exit that market if they actually could. So it seems a little bit in contradiction to the very sort of glossy and very, very positive presentation you gave. I'd be interested in your thoughts.
Yeah, I think it has been tough for many financial services players, but I think that a number have done very well. I think HSBC has done quite well. If you look at the deals they did in the early days on China and where it is, and you look at value creation, I would argue that those have been very successful in where it is. I think that Standard Chartered as well has done that. Korea's been a challenge with what's happening over there, but I think there are players that are doing it. Even Banco Santander, in a very niche market way, and auto leasing and so forth, has done it. I think your point is a good one, though. It isn't like Eastern Europe, where you see a lot of Western banks that have all of a sudden been dominant on that side. And I think in China, a lot of it's because of the regulatory restriction. It's very difficult when you're limited with the number of branch openings to the number that you're given. It's very difficult to build a footprint in what you're doing. Though I'd say Bank of East Asia has done that's a Hong Kong bank. Maybe that's not foreign enough in terms of where it is. I think I think on the retail side, it's very difficult. I think in asset management, if I was in UBS, I would disagree with you, right? I think UBS, that's been a powerhouse for them. I think they're grateful that they had the Asian business during the financial crisis, or I think they would have been in some difficulty. So I think they've done very well. I'd argue Credit Suisse has too on that side, on the asset management one. So I'm not sure I agree with it, but I agree with your sense that there's a lot of bodies, carcasses on the side road in trying to get into that place, and it's challenging to get in. I think in Japan, for example, I find that hard to think of a player that's been able to make it work. But I think in Hong Kong, Singapore, and for some of the early movers in the place, they've been able to do it.
Yes, I'll take the lady here, and then I'll take the gentleman at the back after the lady's question. Okay, thank you.
Thank you, Director Barton. I'm from China's Xinhua News Agency. My question is about, as you mentioned, the economic center of gravity has come back to Asia. So do you think the Asia market means profitable opportunities for the Western companies? And should they adapt to the local market due to the different culture, system, and even the ideology? And how do you think of the two way of Western companies going to China and the Asian market, as well as the Asian companies going global? Thank you.
I think there's a lot of opportunities for Western companies. Again, the financial services one is, I'd say, a more challenging one. But if you look at consumer goods and you look at, Coca-Cola, Walmart, Danone, I could list through a pile of these. That Procter & Gamble, this is a very important part of their economic base right today. Samsung, for example, you could say they're Asian, but there's a big difference, as you know, coming from Korea, going in, operating in that market. And I'd argue that, in fact, one of the key success factors is they've had to challenge orthodoxies of their business model, how they do distribution. Is it done through a third party? Do they own it? General Electric is a classic one. To give you one example, they've always had a model, very strong organization model, that the divisions are all powerful, even in geographies. There may be a country head, but they're not that important. Well, in China, they had to flip that around differently. They had to have a very strong China head where the divisions actually reported in, which was highly unusual. So Procter & Gamble came up with a very different promotion program. They were losing people, so instead of, they were, whatever it was, 2 levels to go to a brand manager, they had 4 levels, so you're getting more promotions. They changed their HR system. So that's where I think you have to adapt to be able to operate in that environment, just like I think many Asian companies are finding they have to do that. When you think about the mergers and business that's gone on there. There are not many Chinese examples of companies that have gone into the US. I think it's quite difficult. It's been a difficult place to operate. But if I look at them in other markets like Brazil, Turkey, other growth markets, they do very, very well. So I just think Indian companies have done phenomenally well around the world. I think they've been very good globalizers. Tata, CK Birla, they've I don't know if it's the language or culture, it's cultural affinity, but that would be my sense.
Thank you. Yes. gentleman there. Thank you.
You were mentioning the circular economy, and I was wondering how much of an impact you thought natural capital accounting is having globally, but also specifically in the Asian market, in terms of driving resource efficiency and changing business practices.
Well, I think that what I would say is that in any of the Chinese cities, you will see all sorts of incentives changing to try and be able to account for what I call it, the secondary effects of what you drive. So you'll see that there are 4 cities in China right now that want to put a carbon price or carbon tax on a system and have organizations be able to account for that if you want to operate in that area to try and get the incentives right. They're not waiting for the country to change. They're saying we'll pilot it. That's what how they're trying to do it. Malaysia is actually trying to do that in their new development that they're doing with Singapore in that area, just in the connection of the two of them, to be able to account for the externalities, if you will, in the pricing. So I think that there are movements or changes that are going on under that way because they're very worried about the implications of the not managing the waste or the resources effectively. But a lot of that too, I'd say, is it's not even just from a waste point of view. Given what I was saying about resource scarcity, you have to be able to, for example, some of the KPIs in a number of the Chinese cities have shifted from GDP growth to energy usage per GDP point growth, water usage per GDP point growth, just to try and get at that. So I don't know if that's getting at the issue you're talking about, but that's being looked at because of the externality.
I'm getting the guillotine symbol from Mr. Rodriguez. I'll take one more question, and it's the lady right on the edge there of the seat. Thank you.
Thank you. I have a question regarding the technological disruptions that you mentioned. So all these large companies know that basically their largest competitors are going to be coming from unconventional sectors, such as Facebook moving into banking and Alibaba moving into banking. But they don't really know how much this will mean in terms of lost output, lost product, lost customers. So I was wondering, how do these companies make strategy for the next 5 to 10 years if they know where the competition is going to come from, but they don't know how much this will mean and how much this will impact them?
I'll try and answer that brief because that's a great question that we're struggling with too. And if you have the answer, come and tell me afterwards. I think there are a couple of things that we're seeing large organizations do. One is it's very difficult to know, right? You can't, because of these changes are coming from out of the woodwork in sectors that you might not be competing in. So one of the things we are seeing companies that are surviving longer or thriving longer is they're actually setting a target for innovation. In other words, we will have in 3 years from now 30% of our sales coming from products or services or from customers that never existed before. So they're kind of forcing innovation in whether you like it or not, because they think that's what they've got to try and drive. The second thing they're doing is how they're actually leveraging their talent. I'm just giving you, there's a number of things, but just to give you 2 examples. Because a lot of the changes that are going on, people have actually seen in the organization. Kodak, for example, knew 20 years before they disappeared what digital was going to do. That wasn't a shock to the system in where it was. The challenge was how to operationalize that or make you do something. And often it's younger people in the organization that know something is going on, but they don't have the power or the voice to do it. And you see in large organizations, people giving people the room to be able to change things. You see blue teams and red teams. Even Facebook, which now thinks they're big, they think of themselves as incumbent. For every new initiative they take, they have what's a red team and a blue team. They compete with each other, right? To try and get, whatever idea. And by the way, the people who lose don't leave the company. They actually, on that transformation I told you about when they went from laptop and sort of laptop and desktop to mobile system, the guy running one of the efforts of how they were going to do that transformation, which lost, I don't know if it was the blue team or the red team, whichever he's now the CIO. right? So he's done pretty well. So it's more about about that. So those would just be two examples of what people are trying to do. Yeah.
Thank you very much indeed. Ladies and gentlemen, that was a very richly informed presentation, and the answers were no less richly informed. So thank you very much indeed, Dominic.
Thank you very much. Thank you.
Well, I'd like to add my thanks, I'm sure all of you, to both Bill Jemison and to Dom. I had on my wall once a picture of an elephant, I think, and it said underneath, adapt or die. I'm not quite sure what exactly that means, but it is nice to tell you that on the board of the Asia Scotland Institute is Elizabeth Linder, who's here somewhere, and she is one of the leading women for Facebook in this time zone. So as was said, not just a tour de force, but a wonderful tour d'horizon we've had from Dom. And I think for anybody who really does believe that what this is all about is embracing the century of Asia, you've had some enormously helpful advice, I think, on the skills you need to acquire and the sectors are the ones that are almost certainly going to grow. And Dominic actually said earlier on today when we were at Walter Scott in a private briefing session, he said, McKinsey itself has to think about how to adapt to meet some of these requirements. And as was the last question, you know, it's trying to work out what the future trends are when advising your clients and how to position yourself ahead of them. Many people, like those who, for example, used to be in the military, will know that you start fighting the new war the way you finish the last one. And it's not surprising, therefore, as military historians will tell you, that initially you really don't do very well. So this has been a fascinating talk. Just to give you a little taster of things to come, Lord Digby Jones is booked in to come up here. If you've heard him speak, that will be interesting. You ask him a question of whether he thinks that the United Kingdom is a manufacturing country or not, he will tell you most forcibly it is. We have one of the Vice Ministers of Vietnam coming up to Edinburgh on June the 9th. He has specifically asked to be able to give an economic briefing on his extremely interesting country, which is fast-growing, but with its own challenges, and a number of other events coming up, including in October, a global conference on the Scottish diaspora later in the year, where we're going to use some of the technology that Facebook and others have to create a truly global network of those who feel that they're Scots or are Scots, to connect them together, not just for social networking purposes, but also to provide channels to market for people with products and services that they would like to reach out with. So a very, very interesting session. What I would ask you to do before we join our hands together is allow the speaker and Bill to get out through those doors, because you can then ambush them when they've been able to get a glass of wine. So thank you very much indeed.
Thank you. Thank you. Thank you. Thank you very much. Yeah.